Hello students, welcome to Accounting 1303, Introduction to Accounting 1. I'm Dr. Claudia Mercado, and in today's lecture we are going to be covering content from Chapter 11, which deals with accounting for purchases and cash payments. The specific problem we're going to cover in today's lecture is problem 1111A. Now I do need to warn you, this is a long problem, okay? So if you get tired of listening to me, take a break, pause it, and then resume it, okay? The lecture will be long because this is a long problem. Now that is the reason I'm covering the problem with you. First of all, it encompasses a lot of the components covered in the chapter. Second of all, it provides us with different areas that we're going to be learning in the chapter, such as journal entries, ledgers, subsidiary ledgers, stuff like that nature. So it's a very comprehensive problem. Now, before you start working on any of your assignments for the week, please make sure that you read. Reading needs to happen before you begin working on your assignments. I highly encourage that you read the chapter and that you review the PowerPoints provided on Blackboard before you attempt any of your coursework for the week. Okay? Once you get those two things out of the way, then you can begin working on your assignments. Okay? Now, I'm going to briefly go over some of the information that is related to the problem that we're going to be covering in a bit with you. Now, this does not substitute you reading the chapter. I am just briefly going over some of the areas or very few areas of the ebook. So you do need to go back and read the entire chapter. Okay. Now, in this particular chapter, we are accounting for merchandise purchases. We are introduced to 4 new accounts. The 4 new accounts that were being introduced is the purchases account, purchases, returns, and allowances, purchases, discounts, and freight in. Okay. Now, I highly recommend that you print out or you have handy with you at all times figure 11.7. It basically is the accounting equation, and it tells you where those 4 accounts fall under. If you look at it, all 4 accounts fall under the expense section of the accounting equation. Okay? Now, purchases and freight are expenses. Purchases, returns, and allowances, and purchases, discounts, those are contra purchases accounts that have the opposite balance of an expense account. So purchases and freight have a normal balance of a debit. Purchases, returns, and allowances and purchase discounts have a normal balance of a credit. Okay. Now, what are we going to put into those 4 accounts? On the purchases account, that is the account that is used to record the cost of the merchandise being purchased. Whatever you buy in merchandise, that is a purchases on your books. You purchase merchandise, okay? Purchases is an expense account on the income statement. When you record purchases, you will be debiting the purchases account. Now, you have an account called purchases, returns, and allowances. This is if you return anything back, okay? So purchases, returns, and allowance is very similar to the sales, returns, and allowances, the account that we learned in Chapter 10, okay? We're looking at returns and allowances from the buyer's point of view, okay? If merchandise is returned to a supplier, or if the supplier grants some kind of price reduction because of a defect or anything of that nature, then we're going to go ahead and we are going to credit the purchases, returns, and allowances. In that case, we are going to be crediting the purchases, returns, and allowances account. Okay, so if you hear of a return or an allowance, automatically think a credit. Okay. We also have purchases discounts. Purchases discounts is once again a contra purchases account with a normal balance of a credit. Okay, so if a cash discount is offered and it's taken advantage of, then we're going to go ahead and we're going to enter the cash discount taken on the credit side of the discount. Okay, and then we have our freight. This is where we keep track of any freight that is paid for when we purchase merchandise. Freight is an adjunct purchases account and is used to record transportation charges on merchandise purchases. Transportation costs are part of the total cost of the merchandise. Those have a normal balance of a debit. Okay, so purchases and freight have a normal balance of a debit. Okay, purchases, discounts, and purchases, returns, and allowances have a normal balance of a credit. Okay, so please keep this handy as you're doing your journal entries. Now, the problem that I decided to cover with you today is massive. It's a long problem. but it's a very good problem because it covers a whole bunch of stuff, okay? We're going to be recording entries in a journal. We're going to be transferring the information to our general ledger. We're going to prepare accounts payable ledgers, and we're going to prepare a schedule of accounts payable. Okay, so we have a lot to cover. So it's a very comprehensive problem. Okay, so the problem reads as follows. Okay, and I'm going to go through it quickly because a lot of the entries are very similar in nature. You'll see that they're just repeating themselves. Okay, so here we have Emily Watson owns a small retail business called Watson's Furnishing. The cash account has a balance of $21,000 on July the 1st. The following transactions occurred during July. Then we have a list of transactions. We are required to enter the transactions starting on page 16 of the journal. We have 2 pages of journal, so we're going to go ahead and do that. Once we are done journalizing the entries, we're going to post from the journal to the ledger and the accounts payable ledger accounts. We're going to use general ledger account numbers as shown in the chapter. Once we're done with that, we're going to prepare a schedule of accounts payable as of July the 31st. We have to verify that the accounts payable account balance in the general ledger agrees with the schedule of accounts payable. Okay, so let's begin. A lot of these entries, we should be very familiar with because we've been doing journal entries all semester long. The core of accounting is learning how to do journal entries. Keep those accounting equation imbalances handy. Keep this available. You should know by heart your accounting equation, okay? This week we're dealing with merchandise of purchase transactions. This is what we're going to be focusing on, along with some other items that you should be familiar with, okay? So if you are having or you're struggling, please print this out and have it handy. So let's begin with July the 1st, okay? July the 1st, we issued check number 414 in the payment of the July rent, $2,500. So what are we paying? We're paying the rent. That's a debit to the rent expense. How much? $2,500. Okay, I'm missing a zero here, $2,500. How do we pay the rent? The rent is paid with cash. Okay, $2,500. Okay. And then I'm going to put the description, paid rent with check number 414. Okay. That happened on July the 1st. So we have another entry on July the 1st. Here we purchased merchandise on account. What does on account mean? That means that we didn't pay for it. We owe it. We purchased merchandise on account from Tilly's Pillows. Invoice number 311 for $2,800. Terms 210, net 30. So what does that mean? That means that we get a 2% discount if paid within 10 days. If not, the balance is due within 30 days. Okay, so what we're going to do now is enter the transaction for the purchase of the merchandise on account. So what did we get? Well, we made a purchase, so we're going to go ahead and we're going to debit purchases. Okay, am I spelling it right? Purchases. Okay, remember purchases gets debited. Okay, the amount of the purchase is $2,800. Okay. And we purchase merchandise on account. So that means we owe money. If we owe money, that is accounts payable. Okay. Now, who do we owe the money to? We owe it to Tilly's Pillows. Okay. So we need to keep track of who we owe the money to. Accounts payable is a liability account with a normal balance of a credit. We should already know that by now. Okay. This is for invoice number 311. Okay. On July the 3rd, okay, we purchased more merchandise on account, but this time from Shear and Company. Invoice number 812, 3,300, terms 110, net 30. Same thing, we purchased merchandise on account. There's a discount being offered if we pay within 10 days. Okay. So that information comes into play when we actually pay what is due. Right now, all we're recording is the purchase of the merchandise. So what are we doing? We're making a purchase, so we're going to debit our purchases account. How much did we purchase? We purchased $3,300. Okay. How do we pay? It's on account, so that's going to be accounts payable. And we owe the money to Shear and Company, okay, for $3,300. And this is for invoice number 812, okay? So that happened on the 3rd. On the 5th, July the 5th. July the 5th, we returned merchandise purchased from Tilly's Pillows, receiving a credit memo on the amount owed. So remember, we bought merchandise, but we haven't paid it yet. Now we made a return. That return is going to be adjusted to our accounts payable. Okay, that's all we're going to do because we have not paid the merchandise yet. So on the 5th, we are returning merchandise. Okay, so if you return merchandise, you no longer owe that money. So let's look at what we did for Tilly's Pillows. Okay, for Tilly's Pillows, I debited the purchases and I credit the accounts payable. That means that I owe $2,800. Now that I'm making a return, my accounts payable needs to be debited for the amount of the return. So accounts payable would have to be debited, and this is for Tilly's Pillows. For the amount of the return, it's $300, okay? And what is happening here? We are doing a return. So if we are doing a return, we have an account for, where is it? Purchases, returns, and allowances. Okay, purchases, returns, and if we have a return, we're going to credit that account. Okay, so we have purchases, returns, and allowances. Okay, and the amount of the return is $300. Okay, and what happened here? We returned merchandise. So that happened on July the 5th. Okay. On July the 8th, what's happening on the 8th? We purchased more merchandise on account, this time from Donna's Lamp. Invoice number 139, $2,900, terms 210, net 30. So we're recording the purchase amount only. I don't care about the discount. That comes into play when we pay the invoice. So we purchased merchandise on account. We're going to go ahead and we're going to debit our purchases for the amount of the purchase. And that is $2,900. Okay. And we are buying it on account. So that's accounts payable for Donna's Lamps. Okay. $2,900. Okay. This is for invoice number 139. Okay. Very good. So that happened on the 8th. On the 11th, it says you issued check number 415 to Tilly's Pillows for the merchandise purchased on account less the return for July 5th less the 2% discount. So when did they purchase from Tilly's? They purchased on the 1st, they paid on the 11th, that's within the 10-day mark, and it says that you get a 2% discount if you pay within 10 days, which is what we did. So that's why we have to take account of that 2% discount. Now, we need to look at how much money is owed. Okay, so we're going to locate the original transaction from Tilly. They had purchased $2,800 of merchandise, and then if we continue going down on the 5th, Tilly returned $300 of merchandise. So the amount that is owed to Tilly's Pillows is $2,500. That is the amount on your accounts payable. We need to clear the accounts payable. Okay, remember on the accounts payable, we went ahead and we credited $2,800 and then we debited $300. That means that right now I'm going to clear my accounts payable for Tilly's Pillows for the difference of $2,500. Okay. At this point, Tilly, we don't owe any money to Tilly's. We're liquidating our balance. Okay. Now, the problem says that we need a 2%. We got a 2% discount for paying within the 10 days. So the 2,500 times the 2% discount will give me a discount of $50. Okay, $50 for paying within the 10 days. Let's look at our notes. For the discounts, we're going to go ahead and we're going to credit our purchases discount. Okay, so I'm going to go ahead and I'm going to credit my purchases discount for the $50. Okay, so I owed $2,500. I get a discount of $50. Then I owe $2,450. Okay, I am making a payment. How do you pay your bills? Your bills are paid with cash. Okay, so I'm going to pay cash of $2,450. Okay, this is check. What check are we paying with? Check number 415. Okay. Okay. So that happened on the 11th. Okay. Let's look at what happened on the 13th. You issued a check for 416 to Shearing Company for merchandise purchase on account less a 1% discount. So on November the 13th, we are paying what we owe for Shear and Company. So we need to look up here for Shear. For Shear, we owe $3,300 right there. Accounts payable, $3,300. I credited my accounts payable. Now, if I'm going to pay that balance, then I need to do the opposite. I need to debit my accounts payable for Shear and Company. Okay, for $3,300. Okay, now this one on the 13th, it says that we get a 1% discount. So we're going to get the $3,300 times the 1% discount. That means we're going to get a discount of $33. So I'm going to do a purchases discount for the $33. Okay, now we're going to pay the balance that we owe. Okay, we owed $3,300. I'm getting a discount of $33 for paying within the 10 days. That means the cash that I'm going to pay out is $3,267. So cash will be credited, and I misspelled cash. Cash will be credited for the $3,267. Remember, when you're doing your journal entries, debits need to equal credits all the time. Okay? Let me insert another one. I need one more line item here. Okay. Okay. So we have one more entry that needs to be recorded on page 16 of the journal. That is November the 15th. Okay. On November the 15th, we returned merchandise. Remember, when we have returns, we use the purchases, returns, and allowances. So we have returned merchandise for purchased from Donna's Lamps, receiving a credit memo on the amount owed, $350. So we bought some stuff from Donna's Lamps, and now we're returning $350 back to them. Okay, so when we made the purchase for Donna's Lamps, let me remove this. So let's look for Donna's Lamps right here. When we made the purchase for Donna's Lamps, I went ahead and I credited my accounts payable. That shows that I owe money. Now, I am returning some of that merchandise back, so I'm not going to have to pay it. So that means whenever we make a return, we get credit. We're going to go ahead and we're going to debit the accounts payable for Donna's Lamps. Okay, and the amount of the return, okay, it's $350. Okay, now the offset to this, we are doing a return, so we're going to go ahead and we're going to credit our purchases, returns, and allowances. Okay, I've got a credit of $350. Okay, so here we are having returned merchandise. Okay, So whenever there is a return and you have not paid yet and you have purchased something on account, you're going to debit your accounts payable. Okay? So that takes care of that page number right there. Now we're going to move on to November the 18th on page 17 of the journal. Okay? November 18th, we issued check number 417 to Donna's Lamp for the merchandise purchase on account less the return less a 2% discount. So we are paying the balance that we owe to Donna's Lamps. So let's look at Donna's Lamps, okay? We've got an entry there and we've got an entry here for Donna's Lamps, okay? So we made a purchase of $2,900. We made a return of $350. So as of today, I owe Donna's Lamps $2,550. So I have a credit and a debit. I need to clear the remaining credit on that account by debiting the account $2,550. Okay? So we're going to go ahead and we are going to debit my accounts payable for Donna's Lamps for the balance due of $2,550. Okay? Now we have to figure out our discount. Okay? Okay, we have a discount according to the problem, a discount of 2%. So we owe $2,550. We multiply that by 2%. So my discount will be $51. Remember, discounts, if we look back here, discounts get credited. Okay? So we're going to credit our discounts, the $51. Okay? So now we can go ahead and we can figure out how much cash we're actually going to give them. Okay? Well, we owed $2,550. We got a discount of $51. The cash that is due is $2,499. That is the cash that's going to be given. Okay? This is for check number 417. Okay? That happened on November the 18th, November the 25th. Okay? November the 25th, we purchased merchandise on account. Let me remove this so we don't get confused. Okay. Okay, so on November the 25th, we purchased more merchandise on account, this time from Applied Interior Designs. So what did we do? We made a purchase, right? So we have a purchases in the amount of $2,650. We purchased the items or the merchandise on account. That means that's going to be our accounts payable. In this case, it is going to be for Applied Interiors. Okay? For $2,650. And this is for invoice number 489. Okay? We have no discount offered. They're just letting you know that you have to pay within 30 days. Okay? So that happened on the 25th. On the 26th, you purchase more merchandise on account, once again from Tilly's Pillows, invoice 375 for $2,180 with terms 210, net 30. Okay, so what did we do? We have a purchase, so we're going to debit our purchases in the amount of $2,180. Okay, and it's on account, so I'm going to go ahead and I'm going to credit my accounts payable for Tilly's Pillows. Okay, for $2,180, and this is for invoice number 375. Okay. Last but not least, we've got another purchase on account from Shear and Company, invoice number 883 for $3,560, terms 110, net 30. So what do we have? We have another purchase. This is on November the 29th. We have another purchases in the amount of $3,560. It is on account, so it's going to be our accounts payable. And this is for Shear and Company. Okay. For $3,560. And this is for invoice number 883. So we are done with the journal entries. If you see, there's a lot of repeats every time you buy an account. It's a debit to purchases and a credit to accounts payable. Make sure to always reference who you owe money to, because we're going to need that information when we do our subsidiary ledgers. Okay, so these are the journal entries that we have for this specific problem. Now we're going to have to transfer the information over to our ledgers. Okay, we should now be familiar with our ledger information, or how to transfer information. So I've already set up all of my ledgers, and we're going to do one by one because we need to be organized when we do accounting. So we're going to start off with cash. Now, if you look at cash, they tell you that cash has a balance of $21,000 on July the 1st. That is your beginning balance for cash, okay? So as of July the 1st, you have a balance, okay? And we have a balance of, okay, this needs to be centered. So we have a balance of $21,000. Now, cash is an asset account with a normal balance of a debit, okay? So that is our starting point. That is given to you in the problem, account balance $21,000 of cash. Now, I'm going to go through the journal that we did, and I'm going to locate anything that has cash, okay? So I'm going to start, and you have to go in date order, okay? So July the 1st. On item, we don't put anything, okay? On the post reference, we put the journal page number. This is journal 16. The transaction is a credit of $2,500. If it's a credit, you subtract. If it's an asset, okay? So I'm going to put that here. That way we know. So that will be 21,000 minus 2,500. That will be 18,500. Once I bring it over, I'm going to go back to my journal, and I'm going to put my account number 101. Okay, I'm going to continue looking for anything that has cash. Here we have cash again. We have an entry for $2,450 credit. Okay, this is happening on November the 11th. I'm sorry, not November. They should be July. I don't know why I'm putting November. July. All of these should be July. So this is July the 11th, July the 13th. I don't know where I got November from. July. Okay, July the 15th, July the 18th, July the 25th. I don't know where I was getting July. July from November, July the 26th. And then July the 29th. Okay, so we fixed the dates. That didn't make sense to me. I was like, what? Okay, so let's go back, and we're going to be looking at July the 11th. Okay, on July the 11th, we have a credit. This is journal 16. Okay, and we have a credit of $2,450. So we're going to go ahead and we're going to get the 18,500 less the $2,450. That'll give me 16,050. Okay, so we're gonna go back, and we're gonna enter account number 101 here. Okay, we continue going. I've got another entry for cash right there. This is on July the 13th. Okay, this is journal 16, and we have a credit of $32.67. Okay, so I'm going to go ahead and I'm going to subtract the 16,050. Let me move it a little bit, that way you can see it. So the 1650 minus the 32.67, that leaves me with cash of 12,783. I'm going to go back, and I'm going to enter account number 101 here. Keep on going, and we have another entry for cash down here of $24.99. This is happening on July the 18th. Okay, so July the 18th. Now this is journal 17. The amount, okay, page 17 right here, the amount is a credit of $24.99. Okay, they're all credits, so this is money that we spent. So I'm going to get my balance minus the $24.99, and that gives me $10,284. That is my ending balance for cash. Okay, we have calculated the ending balance for cash of $10,284. Okay. Now we're going to do accounts payable. Okay. Now, I am going to explain accounts payable because I need that information for when I prepare my accounts payable ledger. Okay. So we need that information, but you get an understanding of how we do the ledgers. Okay. It's very easy to do them. We've already covered them earlier in the semester. This is just additional practice using the new accounts. Now we're going to be looking at our accounts payable. Okay. Anything that has accounts payable. Okay. So here we're going to start off. I'm going to use a different color for accounts payable. Okay. This is on July the 1st. This is journal 16. Okay. And we have a credit of $2,800. Okay. Accounts payable has a normal balance of a credit. Okay. A credit increases it. A debit decreases it. Okay, so the opposite. So you need to know your normal balances of the account. So the normal balance of a payable is a liability, it's a credit. So my balance should always be on the credit column for my accounts payable account. Okay, then I'm going to go back to my journal and I'm going to enter account number 202. Okay, I'm going to continue going. I'm going to find another accounts payable. This is happening on July the 3rd. This is journal 16, and I've got a credit of $3,300. Okay, I'm going to go ahead and I'm going to get my balance, my prior balance, and I'm going to add my credit. So now my accounts payable balance is $6,100. I'm going to go back and I'm going to enter my account number 202. That's the account number right there. Okay. We're going to continue and we have another entry to my accounts payable. This is happening on July the 5th. This is journal 16. This is a debit of $300. Okay. So remember, a debit is going to be subtracted. So I have $6,100 minus $300. My balance is now $5,800. I'm going to go back and I'm going to enter my 202. I've got another entry for accounts payable here. This is happening on July the 8th. Okay, this is journal 16. And my entry is a credit of $2,900. Remember, credits get added. So I'm going to get my $5,800 plus my $2,900. That'll take me up to $8,700. I'll go back and I'll put it over here. I'm going to locate another entry for my accounts payable. I've got a debit of $2,500 on July the 11th. So this is journal 16th. I've got a debit of $2,500. A debit is subtracted, so I get my balance minus my debit entry. That's going to bring me down to $6,200. Go back and I'm going to enter my 202. I continue looking for accounts payable. I've got one more here. Okay. So my accounts payable is July the 13th. July the 13th. And this is journal 16th. And I've got a debit of $3,300. Okay. So a debit is subtracted. It's your $6,200 minus your $3,300. My balance is now $2,900. Okay, I'm going to go back and I'm going to enter a 202. I've got my accounts payable here on the 15th. This is journal 16. Okay, I've got a debit of $350. So we're going to go ahead and we're going to subtract the $2,900 minus the $350. That'll take me to $2,550. I go back and I enter my 202. Okay, so we're going to move on to page 17 of the journal. I've got an accounts payable for $2,550 on July the 18th. This is journal 17 and I have a debit of $2,550. So at this point, $2,550 credit minus $2,550 debit takes my account to a zero balance. At this point in time, I don't owe any money. Okay, I've paid off everything that I owe. Very good. We continue, we go back and we put the 202. Okay. And then we start making more purchases. Okay, so I've got another entry to my accounts payable on the 25th. Okay, July the 25th. This is journal 17. I've got a credit of $26.50. Okay, so my balance will be a credit of $26.50. I go back and I enter my account number on the journal. Okay, I go back and I have another credit entry of $21.80 on the 26th. So on the 26th, this is journal 17, I've got a credit of $21.80. So $21.80. So I'm going to get my beginning balance and I'm going to add my $21.80. That'll give me $4,830. And I put the wrong one here. Here we go. Okay. So I go back and I put my account number 202. Okay. And my last entry for accounts payable is on the 29th of July. Okay. This is journal 17. This is $3,560 credit. So I go ahead and I add my balance plus my credit, and that gives me $8,390. That is my ending balance for my accounts payable. I owe, as of July the 29th, $8,390. Okay, and I go back and I enter my 202. Okay, so that takes care of my accounts payable. So now we're going to go ahead and we're going to go to the next one, which is our purchases. So we're going to locate everything that has purchases. Okay, so I'm going to pick another color. Purchases, we have an entry on July the 1st for purchases. Okay, this is on journal 16, and we have a debit of $2,800. Now purchases is an expense account. Debits increase it, credits decrease it. Okay, and where do I get that information from? From your chart of accounts here, from your T account or your accounting equation. Purchases, debits, add, credit, subtract. On your accounting equation, it tells you what you need to do. So here we're dealing with expenses. Debit you add, credit you subtract. That is why I'm putting the debit down here, the debit plus, the credit subtract. Okay. So the normal balance of my purchases, this is an expense account. The balance should always be on the debit side. Okay. This is account number 501. So I'm going to go back to my purchases and I'm going to enter a 501. Okay. On the 3rd, I have another entry for purchases. This is on July the 3rd. Journal 16. And I have a $3,300 entry. So that's going to be an addition. $2,800 plus my $3,300 will give you $6,100. I go back and I enter my 501 on my journal. Okay. On the 8th, I have another purchases of $2,900. Okay. So we're going to enter that on your purchases right here. We have July the 8th, journal 16. We have a debit of $2,900. Remember, we add our beginning balance that we have, our ending balance that we've calculated, plus the entry, and that gives me $9,000. I go back and I enter a 501. We continue looking for purchases, and down here we have another one on the 25th. So July the 25th. This is on page 17. Be very careful what page number you reference. I've got a debit of $26.50, which is going to be added to my ending balance of $9,000, and that gives me $11,650. Okay, go back and I enter a 501. I have another purchases here of $2,180. This is happening on the 26th. This is journal 17, and this is for $2,180. So we get our ending balance plus our $2,180. That gives me $13,830. Go back and enter your account number. And the last purchases that we have is dated the July the 29th. This is journal 17. The amount is $35.60. So we add the debit balance plus the entry, and that gives me $17,390. So that $17,390 represents the total purchases done in the month of July. That is how much you bought in merchandise. $17,390. Okay. So that takes care of my purchases. Okay. Now we're going to go to purchases, returns, and allowances. Remember, purchases, returns, and allowances has a normal balance of a credit. Okay. So let's go through the motion and let's look for purchases, returns, and allowance. And let's use a separate color. Let's use green. Okay. So here on July the 5th, we have a $300 credit. Remember, your normal balance for purchases, returns, and allowance is a credit. So this is happening on July the 5th. This is on journal 16th. And we have a credit of $300. Okay. My account number, it's 501.1. So I'm going to go back and I'm going to put 501.1. Okay. So I'm going to continue looking for purchases, returns, and allowance. And I have another one here of $350 on July the 15th. Okay. So on July the 15th, this is on journal 16. We have a credit of $350. So we're going to go ahead and we're going to get the balance plus $350. And that gives me $650. Now for this one, a credit increases it, a debit decreases it. Okay. This has the opposite balance of your purchases account. Remember, it's a contra purchases account. Okay. Okay, so my ending balance is $650. I'm going to go back and I'm going to enter 501.1. I'm going to make sure we don't have any more. No, we don't. So we only have 2 entries for purchases, returns, and allowances. So during the month of July, we made 2 returns totaling to $650. Okay. Now we're going to go to purchases, discounts. Same logic. We're going to start on the top. And we're going to look for purchases discounts. Okay, here we have 1. Let's pick a color. Let's do gray. Okay, this is happening on July the 11th. Okay, now purchases discounts also has a normal balance of a credit. So be very careful with that. Okay, so purchases discount, the same thing. A debit decreases it, a credit increases it. Okay. So you need to be familiar. If you are not familiar, go back to your notes, look at what happens. You know, these ones are the opposite of these effects. Look at your accounting equation so you can know what is it that you need to do, if you need to add or subtract. Okay. So for purchase discounts, a debit decreases, a credit increases. Okay. So for purchases discounts, we have, what do we say? July the 11th. Okay. July the 11th. This is on journal 16th, and we have a credit of $50. Okay. This is account number 501.2. So we're going to go to purchases discount 501.2. Okay. We're going to keep on looking for purchase discounts. We have another one here on the 13th for $33. Okay. So July the 13th, this is journal 16. We have another credit of $33. So we're going to add them together. The 50 plus the 33 will give you $83. We're going to go back to the account and we're going to enter 501.2. Okay. We continue looking and we have one more. This is on page 17 of the journal. We have another purchase discount. So we're going to go ahead and enter it. That is happening on the 18th. This is journal 17. And we have an entry, a credit of $51. So we're going to add them together, the 83 plus the 51. That gives me a $134 credit. Okay, that is the last item Okay, so that is my ending balance on my purchases discounts. Okay, so I've got discounts of 134. I'm going to go back and I'm going to enter 501.2. Okay, so last but not least, we've got our rent expense. And we only had one item for the rent expense, which was at the very top. So let's go ahead and let's do our rent expense on July the 1st. Okay. July the 1st. This is on Journal 16th. Rent expense is an expense account. It's for $2,500. Debits increase it, credits decrease it for expense accounts. Remember? So where do I get that? You get it from here. A debit increases, a credit decreases. Okay. Now my ending balance will be $2,500. Okay. So that is the ending balance on your rent expense account. My account number is 521. I'm going to go back and I'm going to enter the 521. So if you see, all of the items in your journal are highlighted. They all have an account number on your post reference. That means that I have transferred all of my information from my journal to my ledgers. If you see here on your ledgers, I have highlighted in yellow my ending balances for each of the accounts. So those items are your ending balances. Okay, so we are done with the journal. We are done with the ledger. We've calculated the ending balance of each account. Now we're going to do an accounts payable ledger. I need to figure out how much money I owe each of the different suppliers that we use. Okay, so we're going to go ahead and we're going to start, and usually we organize them in alphabetical order. Okay, so we're going to look through and we're going to figure out who we owe money to. Okay, so we owe money to Tilly's, to Shearing Company, to Donna's Lamps, to Shearing Company, to Donna's Lamps, to Applied Interiors. Okay, so we've got all of them there. So we're going to start off with Applied Interior Design. Okay. Now, how many entries do we have for Applied Interior Design? Okay, so we're going to look over here and we're going to look for Applied Interior. And we only have one entry and it's for 2,650. Okay, so what I'm going to do for purposes of the next step is I'm going to unmark everything here because I want to make sure that you can see where I'm getting the information. Oh Lord, what did I do? Okay, so I'm not going to put any fill. Okay, I've already shown you how I did the ledger, so that's easy. Now I'm going to work on the subsidiary ledger for my accounts payable. So I'm going to go and I'm going to locate anything that has Applied Interior Design. Okay, so Applied Interior Design, I've got here one for 2,650. Okay, so I only have one entry. It's a credit of 2,650. Okay, so I'm going to go back over here and I'm going to enter that information. Now, usually we are provided with the address of the vendor. In this case, we don't have it. I'm going to leave it blank. But I am going to transfer the information from July the 25th. This is on Journal 17, and I have a credit of 2,650. So therefore, my balance is 2,650. Okay, so that takes care of Applied Interior. Now we're going to go and we're going to locate anything for Donna's Lamp. That's the next letter, D. Okay, so I'm going to have anything for Donna's Lamp. So I've got, let me color that one in a different shade. I've got Donna's Lamps there. I've got Donna's Lamps here. So I've got two entries and then I've got a third entry down here. I've got 3 entries for accounts payable for Donna's Lamps. So I'm going to transfer that over. First, we're going to start off with July the 8th. This one is for Donna's Lamp. So what we're doing here is we're breaking up how much do we owe each of the vendors that we have. Okay, so for Donna's Lamps, it was on July the 8th. This was on Journal 16th. And we had a credit of 2,900. Okay, so that's going to take me a balance of 2,900. And then we had on the 15th, we have a debit of 350. Okay, so on July the 15th, This is journal 16th. We have a debit of $350. So my balance is going to be $25.50. Remember, a debit subtracts, a credit adds. Okay. This is accounts payable, which is a liability account. A credit increases it, a debit decreases it. Remember to practice your normal balances of your accounts. Okay, so that's it for that second one. Now let's look at the third one. We have accounts payable, Donna's Lamps. We've got a debit of $25.50. Okay, so let's put it in. This is happening on the 18th. This is happening on journal 17th, and we have a debit of $25.50. So we owed $25.50, and then we have a debit of $25.50. So for Donna's Lamps, we don't owe anything. We bought something, there was a return, and then we paid off our balance. So we don't owe any money for Donna's Lamps. Hooray. Okay. Now we go back and we look at another one. Okay. So what's next? You know, S is before T, so we're going to go with Shear and Company. So we're going to locate Shear and Company. And we're going to go ahead and find anything that's for Shear. What else do we have down here? We have 3 entries for Shear and Company. Okay, so we're going to go ahead and we're going to enter them into our subsidiary ledger. This is for Shear and Company. Okay, so we're going to start off with July the 3rd. On July the 3rd, this is journal 16th. On July the 3rd, we had a credit of $3,300. That will be my ending balance. Okay, on July the 3rd, credit of $3,300. Then on July the 13th, we have a debit of $3,300. So let's enter that debit. That is happening on July the 13th. This is a journal 16th. We have a debit of $3,300. So $3,300 minus $3,300 debit, that is going to be a zero balance. Remember, accounts payable, a debit decreases it, a credit increases it. So you would subtract, okay? You subtract your ending balance minus the transaction, the debit entry. So that happened on the 13th. Then on the 29th, we have a credit of $35.60. Okay, so we have to go back and we're going to enter that credit. This is on July the 29th. This is journal 17, and we have a credit of $35.60. So the imbalance is $35.60. So for Shear and Company, we owe them $3,560. Okay. The last one we have is Tilly's. Tilly's Pillows. Okay, so let's go look at Tilly's. Okay, so for Tilly's, I have an entry there. Okay, I misspelled payable here. Let me fix that real quick. Okay, so I've got another entry here for Tilly's. Okay, I've got 2. I've got 3 down here. And let's see, what else do we, and I've got 4 down here. So I've got 4 entries to my accounts payable for Tilly's. So let's start at the top. You always want to start off in date order. So we're starting off with July the 1st. I've got a credit of $2,800. Okay. So this is for Tilly's Pillows. Okay. And the first entry we have is dated July the 1st on journal 16th. And we have a credit of $2,800. I'm going to transfer that to my balance. Okay. I'm going to go back and I'm going to see what else we have. Okay, so that was on the 1st, $2,800. On the 5th, I have a debit of $300. Okay. So on the 5th, journal 16, I have a debit of $300. So a debit will be subtracted, $2,800 minus your $300. That'll bring me down to $2,500. Okay, let's go back. On the 11th, I have a debit of $2,500. Okay, so on the 11th, this is journal 16th. Put it in the wrong cell, J16. I have a debit of 2,500. Okay, so 2,500 minus 2,500. At this point, I don't owe any money to Tilly's. Remember, the debit gets subtracted, the credit gets added. These are liability accounts. Okay, so at that point, I don't owe any money to Tilly's. Okay, but then if we continue going down, on the 26th, we bought some more merchandise on account for $2,180. So I've got a credit of $2,180. So I've got this entry on the 26th. This is journal 17. This is a credit of $2,180. So my balance will be $2,180. So now I know that I owe Applied Interior $2,650. I owe Donna's Lamps $0. I owe Shear and Company $3,560. And I owe Tilly's Pillows $2,180. I have calculated the ending balance for each of the people that I purchased on account from, for my suppliers. Okay, so I've calculated the ending balance. Once we have done that, then the schedule of accounts payable is a piece of cake. Okay, all we have to do is bring in the name of the suppliers that have a balance. If the supplier does not have a balance, like Donna's Lamps, for example, then we exclude it. We only want to show who we owe money to. So let's start off with Applied Interior Design. And we owe $2,650. Donna's Lamps is at a 0, so I'm not going to include it. Next, I'm going to have Shear and Company. And we owe Shear and Company $3,560. Okay. Next, we have Tilly's Pillows. We owe Tilly's Pillows $2,180. Okay. We owe $2,180. Okay. So my total that I owe my suppliers, let's see what it is. It's $8,390. Let me put commas on these. Okay. So we owe our suppliers $8,390. How do I know if this is correct? We need to prove our work. Okay. We need to prove that we are correct. So what we're going to do is we're going to get the balance of accounts payable. Okay. At the end of the month. So let's go look at our accounts payable balance. Okay, accounts payable balance. We're looking at our general ledger and look at our ending balance. My accounts payable ending balance is $8,390. Now the problem with the ledger is that it tells you how much you owe, but it doesn't tell you who you owe the money to. It just summarizes all of the transactions for you. In order for you to know who you owe the money to, you prepare the accounts payable ledgers. This summarizes the suppliers that you owe money to. Okay, so the sum of all of your accounts payable ledgers should equal to your total for your accounts payable controlling account for your general ledger. So my accounts payable ending balance is $8,390, which is the same amount that we have. So we are correct. Those two numbers are the same. So that means that we balanced. Okay. The schedule of accounts payable balances our accounts payable, and I misspelled accounts payable again. What's going on? Okay. The balance on your schedule of accounts payable matches your balance of the accounts payable general ledger. So you did everything correct. You are in balance. Okay. So this is a long problem. You're going to have to be really fast at doing your journal entries. You're going to have to pick up your speed on calculating your ending balances on your ledgers so you can be able to prepare your accounts payable ledger and then ultimately your schedule of accounts payable. So this problem gives you a glimpse of a little bit of everything: your journal, your ledger, your accounts payable subsidiary ledger, and your schedule of accounts payable. Okay. So I hope that this lecture is of use to you. Please make sure that you read, Please make sure that you review your accounting equation and that you know your normal balances of your accounts. Practice. Remember, you have 2 attempts on your homework and I keep the highest grade. If you have any questions or concerns, please do not hesitate to contact me. Please review the course syllabus to ensure you are up to date and you meet all of the assignment deadlines. Okay? So that is it for this lecture. Until next time, have a wonderful day. Bye-bye.